The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and welcome to this Daniel Code webinar, and good morning to our friends in the Southern Hemisphere. I know Daryl and Sister Sage are on their way up from Wellington to their beach house in Taupo and Amori, and they've pulled over at the side of the road, and they're watching on their laptop and powering it off her phone, and Sage is saying, hope it doesn't fry. Yes, Peter, you're in Auckland. Nice to see you here with us, and I hope you're going to come to Waiheke for the tutorial, which I'm going to talk about a little bit further. And Brian Coleman, my friend in New York, good morning to you. Can everyone hear me okay? How's the volume going? Can someone just type in the box and let me know if the volume's okay, or Sage, you might be able to send me a note. Okay, Dave. Oh, Dave O'Brien's here. Good. Yeah, Dave, lovely to see you. Dave's a doctor in UK, and he did a tutorial by video. So you're not finished yet, Dave. When you decide you're ready to start trading, you let me know, and we'll brush you up and just put the finishing touches to you. And thanks, everyone here. Sounds good, apparently. Chase, yes, Chase wants me to stop smoking. It's a damn good idea, and I've got to get around to that sometime. It's a problem. Michael, glad to hear you here. Michael Peel is you coming to Waiheke, Michael? If you're still in Fremantle, it's not far to go. So there you are, Charles. You want the sound a bit louder? I'll try and turn it up. Okay, so we've got everyone here. We've certainly got a lot more people today than we normally have, so I guess that means that you're all vitally interested in waterfalls. It may be the M word, who knows? But remember, folks, we're going to not record part of this webinar. I'm going to talk about market turns with you and show you some, I think, pretty amazing stuff. I'm going to tell you about our new leader-follower program for those of you that haven't got time to trade or want to trade but don't have confidence in your own ability. It's a fairly basic program we've started, and I'll come to that. And we're going to look at the long-term charts, particularly on the equities. No, not waterboarding, Dave. Equities and the gold. Which is of interest to many of you. But towards the end of this webinar, probably in the last 15 to 20 minutes, I'm going to teach you about the beginning of the rules about waterfalls. And these are the patterns that set up before the really big, fast moves in these markets. And I'm going to just show you one particular market, and I can tell you it's made $24,000 on a $2,000 margin in 10 months, and that's pretty astronomical. That's sort of like 1,500% on margin, and you can halve that for what you'd have got out of it, because brokers like to see twice margin in your account. So even at 700% in 10 months, it's quite extraordinary. And this pattern happens again and again and again. You can either trade this as a standalone system, or you can trade it as an adjunct to what you have. They're very long-term trades, but they're pretty fantastic. So I'm going to show you that towards the end of this webinar, and that is the piece that will not be recorded. There is some stuff that I like to keep for my clients, and there is some stuff that I don't want running around the web for a whole bit of non-involved idiots to see. So there we are. So Dick, mate, how are you? Good to see you. You're over in, I think you're still in Chicago, if my memory hasn't failed me. Okay, so let's move on, and let's see what we've got here. First thing I want to do, folks, is remind you of our next Daniel Code tutorial. It's at Waiheke Island. which is in the Hauraki Gulf, just off Auckland, which is it's actually not the capital of New Zealand, but it's by far and away the biggest city in New Zealand. It's the commercial capital of New Zealand, and probably the lifestyle capital as well, because the real capital, Wellington's, pretty grim and windy, and famous only for having a lot of coffee cafes. So this is at Waiheke Island. Here's a picture of it you're looking at now. We've been there before. We had a tutorial there in December 2013. It is exactly like the picture. It is beautiful. It is not commercialized. It's pristine. There's a ton of things to do there, anything you can think of, sailing, swimming. You can put your snorkel on, dive down and get lobsters. It's quite an extraordinary place, very beautiful, and you fly into Auckland, New Zealand, and it's about a 30-minute, I believe, ferry trip from Auckland Viaduct ferry service across to Waiheke Island. It's very beautiful. And if you are at all serious about trading, you just simply have to make the effort and get there. And what I teach you at tutorials is entirely different to anything you can learn on the website or at these webinars. So the website and the webinars are more for your everyday trader. If you really want to be very, very good at this stuff, you need to come to a tutorial, and I will teach you everything there is to know about markets and answer every question you have ever had. You can see from the website, you can see I put a list up there of a summary of comments from people who've been to the previous tutorials recently, and it's called What Others Say. And if you read that, you can get a feel for what's going to happen at the tutorial. It's more important, actually, what others say than what I say. So it's on from Monday 7th December to Thursday 10th of December. Monday evening 6:30 we have the cocktail party, which is a bit of a grandiose name for a welcome event. I like to meet you before these tutorials start and talk to you and introduce you to everyone else, so you start to get to know the people in your team or your cohort. New word I've used, cohorts, yes. And for those like Chris and another 20 of you who say, we'll come to the next US-based tutorial. Well, Chris, there may or may not be another US tutorial. I don't know, but I would think if you're a serious trader, get yourself on a plane and get down here. Almost all of these people will tell you they pay for the cost of it in their first trade. And I guarantee you the waterfall trade, Dave's got me talking waterboard, guarantee you the waterfall trade alone will pay for it in its first trade. Chris, do try and come to New Zealand. The accommodation, we're staying at the Onitangi Beach Apartments. You can stay anywhere you like, but they're holding bookings for us until the 13th of November. If you'd like to stay where most people are staying, do make your bookings. I'll show you the document that's got all of these details on them. They're at the website, www.thedanielcode.com. There's a banner there. If you click on it, there's a PDF underneath it, which will... Oh, Peter, you're coming. That's great. I'm looking forward to meeting you, mate. He's a Kiwi bloke that's been with us for a long time. Be great to have him at the tutorial. Anyone else who's coming. They're quite extraordinary events. We have a lot of fun. My idea is that I stay with you the whole time. We do the tutorials, which run most of the day, and then we'll have drinks afterwards. We go out to dinner as a group, and I take you all out to a dinner, you and your partners and guests and friends. As my guests, one day a week. We do other things, but basically we're together as a group the whole time during the tutorials and informally afterwards. And there's a lot of talk afterwards, of course, about rugby and sailing and all the interesting things in your lives and mine. But the point is, it's also we're talking about trading, and it's really a deep immersion. It's we start the teaching on Tuesday, but the knowledge part actually starts at the cocktail party on the Monday evening. So Tuesday, Wednesday, and half day Thursday, we're together pretty well all the waking hours, and we're talking about trading and a lot of other things as well. But the idea is to really get you immersed in the trading culture, and the things I'll teach you at tutorial you will never see anywhere else. You won't see them on this website, and you won't learn about them at these webinars. And then we have 4 follow-up webinars for tutorial people. Make sure this has all gone in, and then we have one-on-ones whenever you need it to make sure that you are trading and trading well. So it's a question of getting getting everyone up to speed. I want to see that you take the time to come to a tutorial, you pay the money. Then I want to make sure that you're getting the benefit of that, and I will, and I do that with everyone. Adrian in Adelaide, hope your wife is happy. Adrian's having a new baby. Make sure you come to Waiheke, mate, and Akshay, you should get yourself down there as well. You're a gun trader, but you need to learn this stuff. Akhtar, I'm going to see you in Waiheke, mate, but you haven't sent me an email yet, so please do. Bill Dallowell, you the same. You really need to come to Waiheke. We've got a new trading program which we've been working on with our team of programmers in Melbourne, the new team. We haven't been able to get what we want from Trade Navigator. And we've got a new team of guys in Melbourne bringing a new look to all of this stuff. And we think it's going to be pretty extraordinary. I'm actually going down to Melbourne next week, which is why we're having a week off, our quarterly break, which we didn't have in September. I don't think we had it in March either. We've only had one this year. But I'm going down there to work with these guys and see if we can do the impossible, and that is to see if we can forecast speed and price for markets in the future. Edmund Land, I think his last name's correct, the guy who invented the Polaroid camera, said, you shouldn't really do anything unless A, nobody's ever done it, B, nobody believes you can do it, and C, it's nearly impossible. And I love that because I've been playing with this for years and years and finding it impossible. But I'm hoping that by looking at all of the data we're now collecting in a different way, we'll be able to have a significant breakthrough. So while you're having next week off, folks, and recharging your batteries, I'll be down in Melbourne, which is the capital of Victoria, one of the leading states in Australia. Wonderful place. Everything's good about it except they don't play rugby. And they play that Aussie rules. Deepak, yes, the rugby go, mate. I've got a bit of a torn allegiance, Deepak, because my wife's a Kiwi. That's what we call New Zealanders, and I've lived in New Zealand for 12 of the last 15 years, and I've got very attached to the All Blacks. But of course, I'm an Australian and spent most of my life here, so I've got a bit of torn loyalty. But anyway, there we are. Let's move on. Let's see what happens at semi-finals this weekend. And must be a way to make this thing move here. Next page, thank you. Semi-finals of the rugby this weekend, and then the finals next weekend. This is a fourth seal chart, folks. This is how we forecast time and price of major market turns. And this has been quite phenomenal. And thanks, Deepak, on Sunday, yeah. This has been quite phenomenal, the fourth seal. Those of you who are subscribed to it will know that it's just been extraordinary. And I will teach you how to do this for yourselves at the tutorial in Waiheke, and hope that will be exciting to you. Here's our compliance document, which I'm required to show you, and excuse me, always suggest that you take seriously. Trading is risky, and if you don't know what you're doing, it's very, very risky. The best way to get rid of that risk is learn how to trade safely and profitably, which you'll do if you come to one of our tutorials. Okay, there's the end of the slideshow, and let's move on now and look at some charts. Here's the first chart. You should be seeing it now. This is the DX, the US dollar index. And I wanted to show you this because apart from all the other things in life, we've had a massive update today in this market, biggest day for months and months, which is great, which is basically a reaction to Mario Draghi, the European central bank chief, saying that he's going to weaken the euro with more QE, and all of the euro pairs have had a big day, which I'll show you, and you'll be interested in how we knew about that 18 hours before any of it happened. This is what you would see on your charts. That's about all you see on your charts. So what I'm going to do now is show you what you should be seeing. So you can get a grip of this. This is the DX chart. This is the US dollar index. It's actually a particularly good trading market because of the size of the tick value compared to the margin. What makes good trading markets is some volatility. This sort of movement that you see on this chart is, of course, excellent. But also the other thing that affects profitability in various markets when you're doing market selection is the ratio of the tick value times the average daily range as a percentage of margin. And you will find these less popular type markets that are more the sort of commercial markets where the expert players play have very high rewards, whereas the more popular markets, the S&P E-mini, those sorts of markets where every man and his dog, and maybe his cats as well, is trading them, they have relatively poor value because the margin is made bigger to protect the brokers and maybe to protect the players themselves. But let's start with this. I'm going to just go through this very carefully today. And when I show you this stuff and it starts to get a bit difficult, don't shy away from it. It's really quite simple if you break it down the way we do, but it looks complex when you see it all together. So I'm going to take you through this stuff pretty much one turn at a time and show you why markets turn. So let's start. Here's a chart as you would see it, and basically it's useless. It doesn't tell you anything. So let's start by switching on our annotations. Okay, and we've now changed this chart quite considerably, which you can see, and we now have a chart that's starting to make sense to us, but there's more to come. The thing that's been added here is some of our trade signals, the more important ones, but really what I want you to be looking at this stage is the numbers, these black lines, the red lines, and the blue lines. Because as I've told you before, but I don't seem to get the message through because we actually know how many of our members are looking at the charts, and I know a lot of you are just taking the signals and not looking at the charts. You know, it takes me 70 hours minimum a week just to prepare these charts for you, and I don't do it because I enjoy doing it. I do it because it's a vital trading tool. And if you're not looking at these members' charts and seeing what markets do and learning to anticipate what markets are going to do, then you're not getting the benefit that you should from the Daniel Code. And the most extraordinary thing about the Daniel Code are the numbers, because they work to a proprietary ratio that I discovered in bits and pieces starting about 20-something years ago. And then it all came together much more recently, about maybe 8 or 9 years ago. And what I found is with these proprietary numbers, these proprietary ratios, it creates these levels of support and resistance which are unlike anything you've ever seen. And we've had a great many people, including brokers, hedge fund people who've been in the business for years and years and years, starting to use these numbers and saying, look, this is just astonishing. This is amazing. Brian in New York is a hedge fund advisor who came to our last tutorial in Los Angeles. Matthew also has been a working broker with most of the big firms, Australian and US firms. These are guys who've been in the business for 20, 30 years, and for the first time, when they see these Daniel Code numbers, they're just absolutely astonished. And in fact, it proves that everything they know is wrong, as you will see from their comments. I'll just show you that really briefly so you know where to go to see it. Here's the Daniel Code website. Incidentally, folks, you need to look at Forum. There's a trade in, I'm not going to tell you what, but I've posted it in Forum. It's a trade that's not in the trade program for today, but it's likely to be elected today or on Monday, and you need to know about it. So go to Forum, those of you who are members and guests, and you'll see I've written it up there. This is the document on the tutorial, and a lot of the quotes from members are in there. And this is the document that I could say is called What Others Say. Just let me show you these briefly if you haven't already seen them. This is the document on the tutorial. This is where it's going to be held. This is the apartment we're staying at, that's right on the beach. It's absolutely beautiful. And this is a bit further on. You'll see there's a map of it. This is Auckland. This is the biggest city in New Zealand where you'll land. And then the ferry takes you over to Waiheke Island. And we're going to be at this place right on the north end called Onitangi. You've got to be a bit of a quick Kiwi to learn these words. It's not one tangi, it's Onitangi. They're Maori words. So let me see, I've got another, you can read this document, it's very detailed. There's one of the vineyards there. Incidentally, the vineyards in Waiheke are world class. They're being bought up by a lot of the international companies, and we're going to go and have an afternoon at one of the vineyards and do some wine tasting. And this is the venue. This is about 200 yards away from the apartments we're staying at, and as you can see, it is what it is. It's right on the beach. So please read that document, and I'm going to close this tab, and this is the other document down here, and this is entitled What Others Say. I'm always a great believer in learning what other people have to say, and here it is, straight out of Forum. All of these comments are either being posted by the members on Forum, or else they're in emails that I retain. I don't make this stuff up, but you can read this and see exactly what these pretty knowledgeable guys have to say. So you'll get a good idea from those two documents. Okay, let me close this and move on to where I was. And let's see where we are. We're back at this chart. So this is the US dollar index, and I'm showing it to you to show you why markets turn. Now, this is only half of the equation, and I'm going to add the remaining things that you need. But the point to make is these markets track these Daniel Code numbers like you can't believe. If you can read these charts the way you should, it's absolutely astonishing. And incidentally, I was telling you earlier, we've started a new Daniel Code leader follower program. Hello, Greg. Good to have you here, mate. Not my preferred form of trading, but Jerry's been driving me mad with our clients who have had, they either have difficulty trading due to their work commitments or lack of confidence or all sorts of reasons. But what we've done is we've started a small leader follower program. And how that works is there's a master account with Jerry Winter. I'll just show you his details in case you need to get in touch with him and discuss this with him. If you go to the Daniel Code website, folks, and just click Contact Us, you'll see that here he is. Here's Jerry, FP Trading is his firm. There's his email address, jerry@fptrading.net, and there's his phone number. And you can give Jerry a ring and talk to him about this leader follower program that he's running for us. And basically what we're doing is we're just trading the blue line trades, and what I call the ersatz blue line trades, which I'll show you when we get there. And these trades go into the master account and they're then duplicated in your accounts. You don't have to do anything. once your account is linked to the master account, you get the same trades, you get filled at the same price, your stops go on exactly the same as is happening in the master account. And excuse me, you can see the blue line trades. The reason we're doing that is because they're the ones I've been encouraging you for years now to try and hold longer and to use a trailing stop on them. You can see this latest one, which took off last week. It was you'll see I'm talking about this trade here. This was a plus trade, a plus buy, but it's also what I call an ersatz blue line trade, and that's a word that means synthetic or created for the purpose or similar. It's actually a German word that's come into the English language, and a number of these trades that are not themselves direct blue line trades because they have one characteristic or another missing, they actually act exactly the same as blue line trades. So apart from the blue line trades that I post for you folks in the plus signals every day, I also tell Jerry anything that's an ersatz blue line trade, which this one was. And it's been 1, 2, 3, 4, 5 days up with this huge move today, caused by Draghi saying he's going to weaken the euro, which means the dollar's going to strengthen. And you can see this trade has made $1,830 in 1, 2, 3, 4, 5 trading days against a margin of $2,300. So this trade has made about 80% on margin, just this one trade. And those of you who are in the Daniel Code Leader Follower program, you got the lovely money. So I guess you're all happy and smiling today. Okay, so let's see what causes all these things. And the number one cause is these Daniel Code numbers, to which we can add. I've taken them off to show you the full extent of this movement here. And these black lines and the red lines are retracements. They're part of this Daniel Code, special Daniel Code ratios, which you find under this symbol down here, which is Dan the Hedgehog. And this is a little mascot. And when you become a member or have a trial, you have a 30-day free trial to everything at the Daniel Code website, which is the best way to find out if it's going to be of interest to you and suitable for you. Then you get this Daniel Code library, which will include the Daniel Code retracement. And you're able to generate these numbers yourselves. So here's the run up from this big crash down, which ended right at a blue line. Here's the rally up straight into a black line. These black lines are very, very powerful. They're actually the last level of support and resistance in any swing. And then this market starts coming down. And you can see it comes down, it ignores this first red line, it finds the second red line because target recognition or price recognition on the Daniel Code ratios and blue lines can happen at a bar high low or on the close. And this bar here, as you can see, this is September the 11th, if you're looking at it on your chart. This bar here closed at 95.38. And this is the number that we had, 95.39. So that is 3 ticks away, or 2 ticks away, 95.380. It's 3 ticks away. Used to be 1.5 before they put in the extra half tick, which it trades in now. And that's what caused this little rally. There's your target recognition on the close. Then you get, this can work for 2 or 3 days, then you get your key reversal bar, your little rally up, and down it comes. And it shoots through all these levels, and it then hits this blue line, 94.660. And the close of this bar is 94.680, which is close enough for target recognition. And that tells us this is going to set up as a blue line trade. And it hasn't got all the characteristics of a blue line trade. But in fact, it creates a TO3 buy the next day, and up this market goes. Where does it go? It runs up to the black line, the same black line that it hit before on September the 3rd. It hits there. 96.89 was the number. The high of that bar is 96.88. It's very, very exact. It's sort of like point 0.005 of the price differential, much closer often. And then it comes down and it starts to move down. It does a little counter trend. Then it puts in this bar here. It hasn't shown us anything yet. And it moves along, and then it comes to October the 7th. And October the 7th, it puts in its low at 95.42 against a number of 95.39. It's not quite there, but it's trying to tell us something, but it tells us the next day, which is October the 8th, it closes at 95.41 against the retracement number of 95.39.5. Just a few ticks away. So what it's saying to us is, I know these numbers and I'm tracking them. And I know you think I'm nuts about this stage when I start saying these things, but that's the reality. These markets track so closely to these numbers that if you don't know what these numbers are, I don't know how you're trading. But it's then given us a sign. It said, yeah, I know these numbers, I'm tracking them. And then to prove it, it does the same the next day. It runs down to the blue line, 94.730. The low was 94.74, and it closes at 94.88 against the red line at 94.88. In other words, 0.885, zero variance, hits that number to the tick. Why do markets do this? Well, we have 30,000 charts at the website for you to see. You have to be a member or a guest to log in and see them, but markets have always done this, and the reason that those 30-something charts are up there is they're all the charts I've created for members since about 2007, and you will see this happening all the time, and it just goes on and on and on in all markets, futures or forex. And if you know how to read this stuff, you can create these extraordinary signals. And that's what I show you a bit about at webinars. And if you come to the tutorial, I'll show you how to create all the signals and a whole lot more as well. But there you are. There was our target recognition saying to us, I am locked onto this sequence of numbers. I know the Daniel code numbers and I'm following them. 2 bars later, down it goes, and it gives us what we think might be a blue line set up here. I haven't put the other blue line stuff on here. I'm going to do that in a moment, but it will compress the chart and you'll have trouble seeing it. So I'm doing this in 2 stages. So we had essentially a blue line set up, but the next day we had perfect target recognition. Here's your key reversal bar, setting it up. It's already met all the conditions for a blue line trade, but it's already done a reversal, so it's not itself a blue line trade. It becomes a plus buy signal for those of you that subscribe to our plus signals, but it's an ersatz blue line buy. In other words, it's going to act as if it's a blue line buy because it's met all of the conditions, apart from this technical condition that to be a buy on the blue line, the close has to be less than the open. So what's actually happened is the market speeded up, and it's working on something shorter than daily bars, and it's made that turn. But look where the low is. The low's at 93.83. The blue line's at 93.84. That's 2 ticks, or 1 tick in the old language. It's telling us I have reversed at the blue line, and that's what markets do all the time, and that's exactly what happened over here with this close at 94.68 against the close at 94.66. Here's the other example. So this becomes a plus buy, and if you're in our leader follower program with Jerry and his firm, I sent Jerry a Skype saying this is an ersatz blue line trade, so run it with a trailing stop, which he's done. And those of you who are in our leader follower, you are now $1,800 richer on a margin of $2,300. So for those of you who are interested in leader follower programs, it's a fairly simple one. We're only trading the blue line trades and the ersatz blue line trades. There's not a lot of trades, but it's been doing pretty nicely apparently. Jerry's been running the figures on it, quite excited about it. Give him a call, talk to him about it. Excuse me, Chase, forgive me. And that's how it works. So let's bring in the other things into play now. and for that we need our 3 tools, which you get with the Daniel Code when you become a member or a guest. And there we are. We have the 2 stochastics. This is straight out of the Daniel Code trading package of studies. It's called the Daniel Code Library. And what we have is 2 stochastics, a fast stochastic, a 533 stochastic, and a slow stochastic, a 1433 stochastic, and we have a momentum indicator, which is a adapted form of the CCI. And if you see what's happened down here, these are the conditions we require to have a blue line trade. Target recognition, this bar finished exactly on the blue line. Big crash down, stopped exactly at the blue line. Short-term stochastic or fast stochastics oversold. Longer-term slow stochastic is oversold. Divergent on the CCI. The market made a new low, the CCI didn't. It was 131 the day before, 119, and then up to 121. The CCI is actually going up. This is, let me redo that. That was minus 119. That's minus 121. You can see that's actually gone up. So there's your divergence. Off it goes. Up here, you're looking for another high. You're not going to get a setup for a blue line trade. You come down here. This is not a blue line trade. This one up here, have a look at it. It's not at a blue line, so it can't be a blue line trade, but it was a TO3 sell, but it's going to act very much like a blue line trade because the other conditions are there. Fast stochastic is not only overbought, it's already switched down. You've got divergence on your momentum indicator, that's at 107. It's been up, that's 97, 95. And now that CCI is up, you haven't got divergence there, but we had other divergence which enabled me to make a TO3 signal, and the fast stochastic to the point where we would expect some sort of correction, and down it goes, and we've run through all of this. This is the ersatz blue line signal here. By the time we get down to this bar, which is October the 15th, the short-term stochastics oversold, the long-term stochastics oversold, and now you can easily see this divergence. The market's made a new low. This is a lower low than the previous bar, and the momentum indicator has not. Those are all the elements of a blue line trade, the most important one of which is target recognition at a blue line Daniel Code number, and that's what you had there, exact to the tick. And that's why we've treated this trade as a blue line trade, because we expected it to act the same as a blue line trade. And the way we trade a blue line trade is we use a 2-bar trailing stop based on the fast stochastic, and we're at a 2-bar stop, 2-bar stop, 2-bar stop until the market gets overbought, in which time we go to a 1-bar stop. Excuse me. So that's that. I wanted to show you some other charts very importantly. I wanted to show you gold. And here it is, and I'm showing you much the same thing here. I wanted to show you how this market reacts to the Daniel Code numbers, because this is the vital part. Now, you know, I've got this concern that I know that many of you are not looking at the charts, and if you're not looking at the members' charts and putting these numbers on your chart, you're trading blind. I don't know. Excuse me, I don't know what else I can say. I've been saying that for a long time, and it's not going in terribly well, which may be that you find it complex or difficult, but do make the effort. My aim is to make you people really very, very good traders, and that's not going to happen without the Daniel Code numbers, because they are the great difference between the Daniel Code and everyone else. Nobody else has these numbers. Okay, so there's your run up. Same sort of thing. I won't labor it too much. This is going to act like a blue line trade, okay, because in fact this is a blue line trade. You had this market running up, hits the retracement number. Now it's starting to track the blue line trade. It's high there. It's 11.53.7 against the blue line 11.54.2. Market saying to you, I know these numbers and I'm tracking them. The next day It puts its high at 1167.9 against the blue line at 1167.7. It's only 2 ticks away from the blue line, which is 2 ticks in a market at 1,167. It's nothing. Excuse me, it's so close. And then that's your setup. Your stochastic, fast stochastics overbought, slow stochastics overbought, your momentum is slipping away, you get your key reversal bar, and the sell trade is elected the next day, and down this thing starts to go. And as it runs down, it finds this support here, it causes a rally, but then it gets down to here. Same thing, this now goes through the blue line, it hits the red line, 1097.5. The low of this bar is 1097.7. 2 ticks in market that's in 1,000 with decimal points, 10 of them. That's 2 ticks in 10,000 ticks. That's how accurate this stuff is. Now it runs up it goes. Same thing here. Here's your next trade, and down it came. And you all know we got this big trade down here because we had this target recognition at the retracement, and we had our stochastics in your fast stochastic in the right place, and we had divergence on our momentum indicator, and up it went. This trade was worth a great deal of money. And there's the blue line high right up there, 1190.4. The setup bar put its high at 1189.9, which gave us target recognition. I'd like to tell you that I've got a touch of the flu today, but that's not true. I think Chase is right. I've been smoking too much. I've had a started about 3:30 this morning. Chase, forgive me. Let's move on. I want to show you that for those of you in gold, Boyd, I don't know if you're here with us, but I know you have corresponded with me about what gold is doing. Let me take you to the weekly chart, and here it is. This is gold weekly. Boyd's looking for a breakout somewhere, and you can't really tell much about that on a daily chart, Boyd. You need to go to a weekly chart or a 6-day chart, but I can tell you that this market's been tracking these numbers beautifully. You can see our 1190.8 was our 74% retracement there. This high came in 1191.7, but look where it closed. 1177.30 against 1177.1. 2 ticks in 10,000 ticks on a weekly chart. Absolutely extraordinary target recognition, and that's what's caused this little retracement. Where do we expect it to go? Well, most likely the middle, the median of the Daniel Code trading channel, which is pretty well where it is now. This market is in a nice strong uptrend. There is a real opportunity for it to break out, but it needs to start tracking these blue line numbers, Boyd, and it needs to move beyond these retracements. It needs to start penetrating 1214, 1281. It's made a high, low. It needs to start taking out these highs around May 2015, and we can keep well in touch with what it's doing there and keep that excited. Okay, folks, I'm now going to show you just really quickly some of the. We don't talk much about Forex in these sessions, but we should. And I wanted to show you a couple of the excuse me, the trades from today. Euro GBP was a sell, and there it is. Big trade, 1800 per one contract. We've also been short from the high. Euro JPY was also a trade today for 1500, and Euro USD. We've actually been short this since this was a blue line trade here, and on October the 14th, elected on October the 15th. That's a blue line trade, so that's now made $2,700. The point of this that I want to show you is not just to tell you how great the Daniel Code signals are, you should know that, but to tell you that I posted these signals 2 hours after the market's close on Wednesday night. In other words, 6:30, 7:30, somewhere around there, 7:30 I think it is Eastern time, on Wednesday night. All of this drama, including the huge up in the DX today, has come from Mario Draghi, the European Commissioner, at their meeting today, saying that he's going to pump in more QE into the euro, and that's what's weakened it so much. But the point I'm trying to make to you is we had the signal at 7:30 on Wednesday night, and he didn't speak until 2 p.m. On Thursday European time. So we have these signals 18, 20 hours before these events happen, and then everyone runs around and says, oh, they're a news event. No, they're not. They're a Daniel Code trading signal. You know, we have this stuff the day before markets. News follows the Daniel Code. Now, I know that's hard to swallow, but there you are. That's how it works. You can see that for yourselves here. So I just wanted to show you that there. Now, folks, I'm going to stop the recording part of this so that I can move on to Waterfalls and show you how to make seriously big money. So I'll now end the recording, but stay with us because we're going to go on to the big money part of this program.